Welcome back to On Point. This is now Market Sense, where we take a look at some of the markets trading, and we start off in the Far East, where Asian markets were mixed on Friday. As volatile, the week drew to what is a close now, with investors preparing for the start of the corporate earnings season, with a few fresh developments on the China-US trade talk front. The rally that characterized the first 3 months of the year appears to be running out of steam. That's while Donald Trump's threats of tariffs against Europe has jolted confidence. Dealers also keeping watch, of course, on the release later today of Chinese trade data, which should provide new snapshots of how the world's number 2 economy is performing as the global outlook does indeed begin to weaken. So mostly green by the day there, as you can take a look at things there. The Hang Seng going up to 21,870 points. The Hang Seng just below 70,000 points, but headed higher, with the Shanghai pretty much unmoved there at 3,188 points. Now, the S&P 500 as well in the United States was flat on Thursday as investors waited for the earnings season to kick into high gear. But healthcare stocks did manage to fall. The Dow Jones Industrial edging 14 points into the red, slipping to 26,143 points. The S&P 500 virtually unmoved, 2,888 points, while the Nasdaq Composite dropped off 0.2% to 7,947 points. Now, the global market picture itself has been one of keen interest to look out for. Of course, looking at global growth fears, that has certainly been a key issue of late. The FTSE 100 is, however, down this afternoon as we take a look at midday trading. A lot of fears stemming, of course, from the outlook on Brexit, but the global growth sentiment has been one to watch out for. The DAX at exactly 12,000 points. The CAC 40 out in France doing a whole lot better as well, moving up on that front. So you take a look at how things are faring on the local board. However, as we go to the next chart on this side, you'll see that things are a little bit better on the JSE as well, firmly above that 58,000 point mark, 58,314 to be exact. The industrials pushed up by Naspers. Of course, a positive day out in Asia does mean that the local indices do go a whole lot higher as well. The financials, however, not doing so well as they make up some room there due to how things have been with regards to the local currency. So things getting slightly hurt when it comes to the financial front there as well. So the bosses themselves really telling that story. Headed over onto the next board as well, you continue to tell the picture of how the JSE has continued to fare. Resources heading higher. Gold stocks, however, not faring too well, but a slight uptick there for the platinum count as well. If you go on over to the commodities front, things are beginning to perhaps change in how they look thus far. The price of gold still below that $1,300 a fine ounce mark, and one of keen interest indeed for market commentators. $900 for platinum. That is one that they'll like to stay that way, but one that we see creeping up continuously. Where does it end? How far does it go? Is the price of oil $71.68 a barrel. Onto your currency front as well, the rand has continued to weaken to around 14 rand against that US dollar, but now still remains there and tries to perhaps beat that mark a little bit more. Let's remember that it was dollar strength more than it was rand weakness that pushed us up to this mark, and it was a dollar weakness that saw us going to around 13 rand 85 or so, 18.24 for a British pound and 15 rand 77 for a single euro. But quite interesting to note, of course, that things have begun to develop today when it comes to equity news. And one of the most significant data points that have certainly come about is Barlow World producing what was a BEE share deal. Now, they've decided to give out around 16.3 million shares at around 10 rand a share. And I just thought it would be interesting to note over the last 5 years how things have fared for the likes of Barlow World, growing nearly 16% for the share price of Barlow World right through there to around 133 rand and 52 cents now. Just a few years ago, trading just around 120 rand a share, now moving steadily higher. So is it perhaps a great investment opportunity when it comes to that BEE share deal, which they are willing to get people a whole lot more involved in? It did open on the 10th of April then, of course. So it is interesting that now you have up until May to get involved into these shares. Here's exactly what the situation looks like. 16.3 million shares at 10 rand each. But one must note with significance and great importance here that you must have a minimum investment of 2,500 Rand. But there is no limit as to how many you can get. So you can certainly start entering these shares when you head on to the website there for the shares, which are called Barloworld's Khula Sizwe, and you can find it on barloworldkhulasizwe.com. The market cap of the shares will be around 2.7 billion Rand, which means that you will be investing in a portfolio of property worth around 2.7 billion Rand. The historic yield of around 9% gives you a return that you may get over the period of time, of course, at around 9% there. A minimum lock-in period of 5 years before you can start taking out any of that money. So an interesting proposition there being pulled out by Barloworld, indeed one that you could continue to invest in up until the end of May or so. Will you be able to invest in the Khula Sizwe share? So that is indeed one to look out for when it comes to that picture. A whole lot of interesting news as well to unpack, a whole lot to still come forward here on Point. Please do stay tuned. This is Market Sense.